Something is quietly happening in the crypto world right now, and most retail investors are not paying attention. The United States is tightening its crypto rules. Asia is opening selective doors for digital assets, and Europe is trying to balance both sides. And here's the real question. Is crypto becoming more restricted in the West while expanding in the East? In this video, we break down the global regulation battle shaping Bitcoin, Ethereum, and the entire crypto market right now. Welcome back to BW Info. If you're holding Bitcoin, trading altcoins, or just watching the crypto market, regulation is no longer background noise. It is now one of the biggest forces moving prices. In 2026, crypto is no longer a Wild West experiment. It's becoming a global financial system, and every region wants control over it. Today, we are breaking down how the USA, Asia, and other major regions are shaping the future of Bitcoin and digital assets. This is not hype. This is structure, and structure drives long-term price direction. Global regulation is splitting in two. Right now, the crypto world is basically splitting into three major regulatory approaches. One, United States, tight control, slow approval. In the United States, regulators like the SEC are still focused on classification and compliance. The approach is simple: strong enforcement, slow approvals, high compliance requirements for exchanges and tokens. This means companies operating in crypto must constantly adjust to legal expectations. While this may reduce scams and risky tokens, it also slows innovation. For Bitcoin, this creates mixed effects. Positive, institutional trust increases. Negative, market uncertainty during regulatory decisions. Asia, controlled expansion and innovation zones. Asia is taking a very different approach. Countries like Singapore, Hong Kong, and parts of the Middle East are creating regulated but flexible crypto environments. Instead of blocking innovation, they are trying to attract it. Key trends in Asia: licensed crypto exchanges, expanding blockchain adoption in banking systems, government-backed digital asset frameworks. This creates a more innovation-friendly environment compared to the US. 3. Europe, structured regulation with MiCA framework. Europe is trying to sit in the middle. With frameworks like MiCA, the goal is clear rules for stablecoins, licensing for exchanges, consumer protection. Europe is not as strict as the US, but not as flexible as Asia. What this means for Bitcoin and crypto markets. Now let's connect regulation to price action and market behavior. Bitcoin impact. Bitcoin is benefiting from one key trend: institutional acceptance. Even with strict rules in the US, Bitcoin is being treated more like a digital commodity, a macro hedge asset. But here's the catch: regulation news still creates short-term volatility. So you often see positive ETF or policy news leads to price spikes. Enforcement or restrictions leads to short-term drops. Altcoin impact. Altcoins are much more sensitive to regulation. Tokens tied to decentralized finance, privacy, or cross-border payments are especially affected. Stricter rules mean fewer risky token listings, more compliance pressure on new projects. This reduces hype cycles, but increases long-term stability. Market sentiment right now. If we look at global sentiment in June 2026, the market is in a cautious but optimistic phase. Key signals: institutional money is still flowing into Bitcoin. ETFs, retail participation is moderate. Not extreme volatility is present, but not chaotic. Regulatory news is the main trigger for short-term moves. In simple terms, this is not a panic phase and not a full bull mania either. It's a transition phase. Risks investors should watch now. Let's talk about risk, because regulation always comes with uncertainty. 1. Sudden policy changes. A single announcement from regulators can impact the entire market within hours. 2. Exchange restrictions. If major exchanges face new compliance rules, liquidity can drop quickly. 3. Stablecoin oversight. Stablecoins like USDT and USDC are under constant scrutiny, which affects trading flow across the entire market. 4. Cross-border trading limits. Different rules across regions can create fragmentation in global liquidity. In this environment, even with regulation pressure, there are opportunities forming. 1. Institutional growth. Big financial firms are entering through regulated channels. 2. Infrastructure coins. Projects focused on compliance, payments, and scalability may benefit long-term. 3. Regional growth markets. Asia-focused crypto projects may see faster adoption due to friendlier environments. In my view, the market is entering a phase where regulation is no longer an external factor. It is part of the core market structure. This means traders who ignore regulation will struggle to understand price movements. At the same time, overreacting to every regulatory headline is also not the right approach. The key is balance. Understand the direction of policy, not just the daily noise. Here's what viewers should focus on right now. 1. Track regulatory news weekly, not hourly. Daily headlines create emotional trading decisions. 2. Watch Bitcoin. ETF flows. Institutional inflows are now a major price driver. 3. Monitor stablecoin liquidity. This tells you how active the market actually is. 4. Avoid over-leveraged trades during news events. Regulatory announcements can create sudden spikes in volatility. Let's quickly recap. The USA is focused on strict crypto regulation and enforcement. Asia is building controlled but innovation-friendly crypto zones. Europe is using structured frameworks like MiCA. Bitcoin is gaining institutional legitimacy, but still reacts to regulation news. Altcoins face higher pressure, but also selective opportunities. Market is currently in a transition phase, not a full bull or bear cycle. If you found this breakdown helpful, make sure to subscribe to BW Info for more deep crypto market analysis. Like the video if you want more updates like this. And comment below, do you think Asia will lead the next phase of crypto growth, or will the United States remain dominant? Stay tuned, and I'll see you in the next video.